The screen's pretty slow to update, but this one is about investing and financial education.
John, I was sat at the back.
Oh,
it was
I want
actually,
to stand up.
Yeah, should we stand?
Okay.
Exercise.
Stand for our audience. Stand for our audience. I don't know if I-
One thing Matt told me was that someone had come here today from Bath and got here for 8:30 in the morning. Who was that?
It's me.
Wow, what time did you wake up this morning?
Actually, 3.
3 o'clock. Wow.
My team also came from Manchester.
Okay, what? Can you beat 3?
Yeah.
Wow. Great stuff. But yeah, that's amazing, and absolutely, like, credit yourself for those people. And look, even if you've come from down the road in like East London, that's equally as cool. But the point being is that, look, the fact that you've made an effort to come here and to learn, to network is amazing. And it's, International Education Day, so it's great for us to talk about some of this stuff. Perhaps, John, you can introduce yourself, and then I'll go over who I am and what we're going to talk about.
Yes, thank you. As Matt said, Canadian. Keeping with the theme, I have been here in this gorgeous country for almost 26 years. I don't know what it says about the people leaving Canada or choosing the UK, but it's been a great place for me. I'm in private wealth, which of course uses a lot of fintech and a lot of information that we talked about today. And yeah, I'm very happy to be here.
As a Canadian, I put on the great British weather for you today, so I really appreciate that. But so we're going to talk about really 3 themes. We're going to talk about one. We were having a chat, John and I, earlier in the week, and my job. So I work for a company called Amplify Me. Some may have heard of or come across the university campus. So we basically design simulations, role specific, for people to experience finance. There's a huge kind of chasm between people who study finance or non-finance, and then what is it that people actually do in these jobs? And I have a lot of interaction in my role with students, just like yourselves. And one of the biggest things is a lot of people think that working in markets, and a lot of the speakers here, is opening your mind to fintech and technology roles. But when they think about finance, they typically think trading or investment banking. And naively they go, that is the world of finance, and either you go one or two. But actually, what we're going to talk about first is kind of breaking that down. I know John will do a really good job of that. We'll talk about a few of these different types of roles, including ones that both John and I have done, and also the skills associated with that. And then the second thing we'll talk about is about investing 101, because I know you do a lot of that with your clients now, and you've got some good steps that perhaps for your own personal finances and your own development, in terms of, from my side, where you can source information and upskill yourself from a commercial awareness point of view. And then we'll talk a little bit about the intersection where I sit between using technology for financial education, which is what I work in. So, yeah, jargon busting the kind of roles, John. So what?
Yeah, no, Matt touched on it. We met at Matt's first job, which is Royal Bank of Canada, and that's a bank. That's a private but personal commercial bank in Canada, private bank here in the UK, and it obviously interacts with the individuals every day. And there's a whole slew of different type of banking. Everyone really gets starry-eyed over investment banking, working in private equity. Last decade it was about VCs, maybe it still is. Now it's about crypto. There'll be, and I'm sure there'll be another one. Blockchain,
AI, come on.
AI, but there's all different segments within the banking world, and I would encourage everyone to start wherever you can, because that's the first journey. Any job is better than nothing, and it gives you a lot of experience, and a lot of boring banks or credit card companies need young people, vibrant people to learn and to work their way up and to get the experience, because then you can go and decide to leave your steady job and go work for a startup or take your cash and stock or whatever you want. But sometimes it's nice to get a paycheck, and that's where banking is very good. They provide a good opportunity for people to get into the marketplace. So I would just recommend, it's not all about following the where the cash or money is. It's starting off in private banking, in commercial banking, in Lloyd's, in NatWest, starting in credit card companies, and working your way up, because there's many different facets of banking, and it's not just all about the quick, easy money.
Yeah, and definitely, you know, I sympathise with a lot of young people now, because you see everyone on LinkedIn that's like, I've secured an internship, I've done this, my best life. And you're kind of thinking, wow, like, how am I supposed to compete with that? I mean, for me, I finished college with 2 A-levels, a C and a D. And now I sit on the management team of the company I work at, and I'm a C-suite person. And I can honestly say that one of the main things that I had experience of was that I didn't really quite understand the skills that I had as an individual, and that could be applicable for a very specific type of role within finance. That being, I used to play national level sport, and so from a very young age, I was very much groomed in a way where disciplined, consistency, I could take constructive feedback very well, let's put it that way. I could work hard, I could graft, and I was a quick learner. And actually working under pressure, and the company that Matt and I worked at for 10 years, you know, that was our job. And I found that actually there was a place for me that very much mimicked my sporting youth. But I didn't know that existed. When I was actually at high school, I had a letter from the Royal Navy saying you should join the Marines. And my teacher said you should go in the building trade. As in, not building apps, building. That was my outlook, because we went to a state school where 20% of the kids at our school from our town achieve a C grade, not even getting A stars. If you get B, you're the best in class sort of situation. But the point is that definitely, you know, if you can get an internship at Goldman Sachs, like I think Vinesh, you are going to accelerate your learning, you're going to get that income, and you can make that career pivot decision to go on your own. But if you're not, you've got to understand that you can make that journey happen. It's just going to take a little extra time. That's all. So absolutely,
Yeah, and the journey is the most important. It's the most rewarding. I grew up in a very small town. I grew up on a farm. I took the yellow school bus every day, and it's true. Lovely journey. And I just wanted to go to university, and I went to the bright lights big city of the University of Toronto, and that afforded me many opportunities. It allowed me to understand that I wanted to get into banking. In fact, when I was young, I knew I wanted to get into banking, but I just thought it was going to the teller and getting your passbook updated. Probably lost on most people, but you didn't know what your balance was back then. You had to get it updated every month or two. And I just thought that was fascinating, and I wanted to get into banking. And it's in university, I was a teller part-time to pay my way through university. So, and then from there, you learn about all aspects of banking and finance. And here I am today in the city of London. So it's been a very rewarding trip for me.
Yeah, never underestimate the life experience of whatever you've got. I always see a lot of students' CVs, and they're like, you know, they're thinking, all right, I want to work in this tier 1 bulge bracket bank, and you're like, yeah, I worked at Waitrose, or I worked at Sainsbury's, and you're like, yeah, of course, or you ran a bar, student union, and you're like, come on, you were perfect for a training floor. You know, people shouting at you, people saying, I want more, where's my beer, you know, all this sort of stuff. Basically, you change the terminology, you're talking markets now. And so there's lots of things, you just got to think about, okay, if you can understand those roles, and we'll talk about this a bit later, because this is what we do as a company at Amplify Me. If you can understand those roles and what it entails and learn these traits and what are they, you can find your fit much faster. But let's talk about investing, John, because I know you spend a lot of time with your clients, and I know you explained to me earlier in the week a really nice way of just simply going through what people here could be doing now at predominantly a younger age to start investing.
Yes, well, it's a conundrum for most young people. I mean, I don't envy you. Student debt is at record highs. You know, it's very competitive out there. A lot of students are graduating with student debt, and it's rolling up at, some would say, exorbitant rates. And really, you know, you need to, debt is the evil, really. You know, especially when it's compounding at a rate greater than inflation. So obviously paying back student debt is probably the most important bit of advice I would give. but also in terms of if you can save, or more importantly, if you're in a position, you know, you have obviously junior ISAs that some of your parents can put you into, you can roll up into. That's £9,000 a year. That's not available to most individuals or families. But then you basically have the auto enrollment, that if you do get a job at a stable bank that pays you a salary, they have to enroll you into a pension. And I know it sounds very boring these days. When I was at Royal Bank of Canada, they had a defined benefit pension plan, which is unheard of. And I used to think, what is this? You don't see the benefit, you just see, 3 or 5% of your money coming out every month. But it gets matched, by your employer, and it grows, and more importantly, you can't get at it. And hopefully it's invested in the right kind of investments, which for young people are usually more growth-oriented investments. And it's really just probably tucking it away and making sure it's growing in the right fashion. But from pensions to lifetime ISAs, which under the age of 40, you can put in another £4,000 into it. It's just about putting it into investments that are in deferred tax structures, because compounding, as Warren Buffett said, is the most magnificent opportunity for individuals, because that's where you really create wealth. And you don't realize the benefit of a defined contribution, defined benefit ISAs, until you're later in life and you have this support that you can see your money actually growing over the long term. And there's not many things left in the UK. There's obviously the government is trying to reduce the ability for people to squirrel away money in trusts and offshore, and they're doing a very good job. But ISAs, pensions are the bedrock for every individual. And if you add it all up, it's quite a lot of money if you can put £20,000 into an ISA every year, or if you can put 8 to 9% into your pension. It does grow, and over your career you'll have a nice pot.
Yeah. And just talking about technology, because a lot of the conversations I've had so far about apps, and to the point of that app that was mentioned, where it's like you'll buy a cup of coffee, I've got 2 pence left, that goes to the fund, I'll buy a slice of Tesla, these sorts of things. And I know everyone got some Trump coin last weekend. I mean, they'd probably be not here if they did, they're probably in Bahamas or something. But the point being is that I know you spoke about allocation, and I think that's a really important concept perhaps you could touch on, which is about the degree of associated risk with certain investments. And now that technology has kind of removed certain barriers and given more accessibility, that comes with pros and cons. So perhaps a bit on allocation.
Yeah, allocation is very key. It's a lot of education I spend with my clients, learning about the associated risks and returns and liquidity and constraints of certain investments. And I think the last few years, the gamification of investing has come to the forefront through Robinhood and eToro, and these apps and Revolut. You can buy crypto, and is it regulated or not? And I'm sure a lot of you have friends who have made and lost a lot of money in altcoins and crypto coins. It's just making sure you have a spread and you're comfortable with risk. Obviously, you probably have a much higher level of risk than your parents or grandparents. And as you get older, you become you become more risk averse. Sorry, and you have more responsibilities. But it's compounding is your friend, and diversification is your friend. And it doesn't necessarily mean you're diversified across 10 different altcoins. That's I think you need to have a level of weightings across all assets, whether it's cash for daily use, probably less so for fixed income in this room, but within equities, you obviously have more traditional equities that pay you a dividend. Like Aviva pays you 7%. It doesn't sound very good, but again, compounding up, that's quite good. And then you have growth type equities, which I'm sure we're all familiar with the Magnificent Seven. And then you have different alternative assets, you have commodity assets, and they all operate differently the cycle that we're in. And it's just very important to have a diversified approach, and everyone's asset allocation will be different. And don't play around with it too much. Have a consistent rebalance, and don't put all your eggs in one basket.
Yeah, I'd say one useful thing I've seen lots of students do that's equipped them well to then secure roles, whatever that might be, is when you're a student, is having a paper trading account where if you do want to work in markets, for example, or crypto, whatever it might be, traditional markets, that you can actually start to kind of contextualize your views on markets, learn about it, describe what it is that the trade structure is, why you set it up fundamentally, technically. If you can actually talk about these things and they're tangible, it's so much better than just talking about a theoretical concept, for example, because you're talking from experience. I can tell you, because I sit between business schools and employers with the students in the middle, the employers do not care how much you've made in any type of trading account. What they do care about is how can you articulate the rationale behind your decision making. Because if that is sound in that process, well, then you are coachable and teachable. You know, because one of the things that you'll realise is when you actually finish university, what you've learned and a workplace are quite different, often radically different. You know, one example I was thinking of on the train this morning was that if you think about an airline pilot, think about the training an airline pilot goes through, right? They sit in a simulator that has the exact same stitching in the chair of the plane, with all the control panels, with multiple screens, everything is assimilated exactly the same. Now think about your last uni lecture you had to the job you might want to do in the future, and how similar is that? It's not, right? It's like completely absurd that then you're expected to just come in and do these things. So we'll talk about the simulations and stuff that we do, but the other point I wanted to touch on was using technology now and accessibility for finding information to learn, okay, which is super important. So at the moment, say if you're keeping up to speed with what's happening in the global economy or the market, just shout out, what would be a source of information that you would use at the moment?
White papers.
White papers, okay. Bloomberg, Financial Times, okay, cool. So these are the sorts of things, like, I remember when I was a student, they'd be like, hey, Ant, you should read the FT, and you're like, you read the FT and you're like, oh, okay. I'm being told I should do this, I'm not really sure why, and I don't really understand much of it. But that's a really kind of inefficient use of time, because actually when you read the FT, there's like, you know, lunch with Novak Djokovic and things like that. And
How to spend it.
Yeah, how to spend your money. And you're like, if you think about the FT is written really for, you know, slightly grey individuals like John and I. It's not really meant for the purpose of what you're looking to do, which is acquire knowledge. So definitely you can find very niche industry-specific newsletters, which are good aggregator tools, which just basically, you can have a daily digest of 2 or 3 minutes. Bloomberg, the FT, I read FT newsletters very specific to deals in M&A, given what I generally follow day to day, and also in global markets and macro. I don't really read the FT because I just get the aggregated top things I need to see in that form. And podcasts are the same. You know, now you can literally have a conversation with the chief US equity strategist at Morgan Stanley, one-on-one with you on the tube. You know, there's no way you would have had accessibility to that when we were younger, but now podcasting, because these are sell-side institutions who want to promote their views, they're openly sharing these things. And what I'd suggest is you absorb them, use ChatGPT to deconstruct anything that you're not sure of. So use AI as a tool, as a coach, to fill in the gaps, and then have a habitual habit of listening to content like that, and you'll be surprised how quickly you upskill yourself.
And there was an example a few years ago, which I'm sure everyone's aware of because they made a movie out of it, with Roaring Kitty and his fascination with GameStop, and it was on YouTube and Reddit, I believe.
Yep.
So he had quite a following, like hundreds of thousands of followers, and he learned. I mean, he did go to university, and he started in a kind of insurance company, I don't know, admin role. But you know, he had a thirst, and he would learn, and he would do these podcasts, and video casts, and people would put in questions, and he really spent a lot of time learning about the intricacies of the market. Now what they found out is they were able to affect the price of GameStop through options, but he came out pretty well. He's retired now, and hopefully got a cut of the proceeds of the movie. But YouTube obviously has been mentioned a few times. Spotify through their podcasts. CNBC has great podcasts, and Bloomberg.
Yeah, I think actually if you think about it, and this is a kind of a knock-on impact of this process, every single company probably has a podcast these days.
Yeah.
And so it's a good way to get to know a firm, to get to understand their products, their services, what they do, how they differentiate themselves from their peers within their sector. What I'd also encourage you to do is also make a mental note of who are the people appearing on these podcasts. Sometimes we're guilty, I think, all of us, of just consuming content. And actually, you need to open your mind and go, okay, who was that? And is this now a good hook or anchor for me to outreach to this person on LinkedIn, for example? So rather than just going, oh, I'd love to be connected to this person at JP Morgan, I'll send a message or some vanilla opening statement. If you specifically, and my word of advice, if you pay someone a compliment, as a human being, you find it very hard not to reply. Because it's just rude, right? If someone said to me, "Anne, I listened to your podcast you put out this morning, you said this, I really appreciate that, it was really insightful," I'd be like, yeah, I'll reply to that guy. Game on you for listening. So there's all these things that are there, open as equal opportunities for all of us. You've just got to have an open mind and utilise these opportunities when they're there.
We've got time for one question.
Yeah. Okay.
Yeah.
Right.
Question for John from a fellow Canadian.
Wow, what is this conference?
It's a loaded question. Can't be about politics, huh?
No. We've seen obviously people get very creative with their investments, from things like Trump Coin to now you can buy splits of a Mona Lisa. What's like an alternative investment that you've seen that would be the most interesting, you would say, that maybe not many have gone to see?
Well, I think the alternative space is very, very interesting. And in terms of, you can just writing a put strategy right now is very interesting. Taking in premium on picking, let's say, 20 stocks, agreeing to, if you want to own them now, you can take in premium and be patient and provide the liquidity to buy those stocks if they fall 10 or 15%. And that's a very interesting strategy that we're putting in for clients, because it's non-correlated, sort of the jargon, with the market, and quite frankly, the market's just been melting up in, sadly, very concentrated 10 stocks.
Thank you very much.